Okay, welcome to the Swing Trading with Cycles channel. This is our individual miner update, our individual gold miners update. We're doing Wheaton Precious Metals. So WPM is the ticker symbol. This is the 9th one, and so you'll see a link in the description. Definitely a card at the end of this video, and depending on what platform you're on, you should actually see something coming up on the right-hand corner of your screen to give you an opportunity to download that or to watch that playlist. And so basically, we're going to start with the yearly chart as we usually do. This is where each candle is a full year of price action. This is, again, Wheaton Precious Metals. It's November 29th, but this in 2022, November 29th, 2022. So just one more day left to trade in November. And then we have our last candle of 2022, December. And then we roll into 2022 or 2023. And so this is going to actually be pretty applicable to even a year from now, right? Because we're going to be looking at the big picture, and that's where we're starting, this yearly chart. So this thing goes back to, what is this? 2005. So this candle is all of 2005 encompassed in one candle. I love these charts. If you're familiar with this channel, you know we look at these all the time to get a bird's eye view of what the heck is going on. And this year is 2022. So the first thing that you should notice is that this year is a bearish outside year. And what I mean by that is the range of this year is outside the range of the previous candle of the previous year. And in this case, the candle is red, so it's bearish. So in 2021, we had a range. The high was $49.10. The low was $34.85. So let's call it a range of 49 to 35. And then in 2022, we made a high at $52. Call it, I'm rounding up here just for simplicity's sake. So $52, which means we went above the $49 high, right? And then we made a low of $28.62, which is below the low here of 35, give or take. And so we went to the upside, and then we ended up resolving to the downside. The catch here also is that this is a doji of a candle, which means there's just a ton of wick on either side. And in practical terms, that means we're pretty much guaranteed to have 2023 start as an inside candle, right? So the same way this is outside, meaning it went outside the range of the previous candle, this would be an inside candle, meaning it would be inside the range of the previous candle. In this case, our 2022 candle, which is forming now. We say that because we only have 1 month of price action left. So there's not a whole lot that's going to change. We're probably not going to make a new low. We're certainly not going to make a new high. And I doubt that we're going to make a new low either. We're here at $38, so I don't think we're going to get, well, who knows? We could have a really bullish month and make a new high. But this gives us a kind of a picture where we may be, and to kind of zoom out for a little bit, this is your 2020 candle, you know, that we had the COVID boom and then the pullback, which is this wick, this upper wick. All of the last 2 years have just been inside the range of 2020, right? Which has a high at 58 and a low at 19, basically, right? And so now it's going to be a question of what do the next several years look like? Do we work our way out of that range? Because until we do, this is mostly just consolidation. The good news is it's consolidation towards the upside because this is an uptrend, right? Like we have this uptrend here and then this swing high, this pullback, and then this move higher. This is a higher high than this one, right? Notice. So another way of thinking about that is you see where these arrows are drawn, right? These are just calling out the swing highs. Well, this is a swing high. In this case, this is not a swing high, but it is a high so far. But you can see this is a higher high. So the presumption would be that eventually we do something like, you know, maybe like, and then eventually we kind of break out of that range. Now the question is, how much time do we spend kind of bouncing around within this range and then more broadly within that range? But the good news is it is moving higher at least. So that's the annual chart. Let's zoom in. Let's look at the quarterly chart here. So, and I've drawn swing highs on these quarterly charts as well, and swing lows as well. So this is the same chart, just we're looking at, obviously, you know, we're looking at a deeper look. And so you see more swing lows and more swing highs because we're able to see a little bit more detail in terms of the move. So one of the things I would point out is we currently have a quarterly swing high in place. So as long as we stay above 37.27, we have a quarterly swing high in place. So that's going to be an important level to watch throughout the rest of the year to see if we can kind of remain. And we're obviously really close to that level right now. So any little pullback, any little sneeze on the lower time frame is it's gonna bump us up against that number potentially. So that's going to be important to watch. And then it's really this candle that we need to get it back above, right? The Q2 big bearish candle. And that's a technical term. It's in bearish outside candle, right? I hope you're seeing that, right? Like the same way the yearly is a bearish outside candle, this quarterly candle was an outside candle. And then we got follow through to the downside. That's what created the annual outside candle of this stuff, which is 2021. And if we zoom in further to the monthly, you start to get a picture of how the longer term cycles kind of played out, right? So you have this swing high and then this massive decline. Let's just contextualize that, right? So this whole period, so we rallied for 29 months and then we declined for, wow, like 55 months, something like that, in that neighborhood. Yikes. So this whole thing was 85 months. So analogous to like a gold 8-year cycle, right? And it makes sense that you would have this kind of same long-term look. So you see we made this move up, and then this is your big decline. And then this is clearly another cycle, right? Where, right, is this the low, right? Right? Like, question mark, right? Like, that's interesting, right? Like, that makes sense, though. And in this case, this decline is nowhere near as dramatic as this one. And that's because this rally, does it last for a lot longer? Let's see. That is month 55. And this is also a little bit shorter. Whereas this rally, topped on month, right. So this topped, right, that's right. This topped on month 29, whereas you could say this thing has rallied for 55 months. But at the same time, like, this period here was obviously really tough to stay long through. And that's also part of the rub when you're looking at a really long-term cycle. It means by definition, you could have periods of chop. Like this is a tough one. Whereas this cycle, and that's an important thing to understand, within some kind of like 8-year cycle, you're going to have smaller cycles, like 2-year cycle, whatever it is, because that's how price action moves. It's fractal. And so if we are like, this all hinges on, is this gold's 8-year cycle low? Because it's hard to believe that we're going to get a sustained rally if, September wasn't the 8-year cycle low for gold, which at this point it possibly could be. And that's something we're going to have to continue to watch. And if we think about the weekly cycle, I'm guessing this is the same count as GDX. So started here. Yep. So we have our high on week 8, and this is currently week 9. So let's say we have a weekly cycle that's like 24 weeks, something like that. The last one was pretty long. Wow. Wait, that's a really long cycle. Oh, interesting. I mean, I guess if you want to quibble, you could say this is the start of a cycle, right? So it's actually 35 weeks. And this was a higher low, actually, which was a big fake out, because then you had this rally that looked pretty good in real time, and then this precipitous decline. So we're going to look at the ratio charts next to get a sense of how this looks versus the other, like the index itself, for instance. But we're same count in terms of the weekly cycle. And the daily certainly looks to have topped on this day here. So this is kind of similar to what we're seeing for some other miners as well. So let's look at the ratio charts. This is your ratio chart here on the right-hand side. Let's zoom down to a monthly and just kind of look at the charts side by side. And you can see we're much closer to making a new high on the ratio chart of WPM versus GDX than the absolute chart, which means it is one of the better performing ones in the index right now, within GDX, I should say. And if we think about, just let's zoom out to the annual chart. This year has just been consolidation inside the range of the previous year. Now, again, keep in mind, this is a ratio chart, not an absolute chart. So this doesn't tell you about the absolute prices, but this does tell you that we may be on the verge of kind of breaking out, meaning, Wheaton Precious Metals will outperform GDX where you'll make more money by being in Wheaton Precious Metals versus being in GDX if you had to choose between those two in terms of where to allocate capital. And if we look on a weekly level, ooh, that's interesting. So we just printed a pretty ugly weekly swing high. So just thinking really tactically, like for the next few weeks, Wheaton Precious Metals is likely to underperform GDX. So that's interesting. And of course, if you understand how price action works, if this underperformance continues, it will cascade onto the lower time frames. What does the monthly look like? Oh yeah, the monthly is green, is red, and we're obviously about to open a new candle in December. So this is not a good look because this also sets up the proposition that this becomes a lower high, right? Like by topping out here, we just become a lower high of this, you know. So this is definitely not one the best performing, but it's also like on the whole not doing terribly versus GDX. I mean, it does look like we're coming into a pullback, which we're gonna have to watch more closely, especially the idea that we lose this level. And again, because this is a ratio chart, hard to say how this affects the absolute prices, but it does tell you, you know, right this moment, Wheaton Precious Metals is probably not the place to be to outperform GDX, right? If you were just thinking about capital allocation, within the gold sector. So we'll leave it at that. And again, check out the other individual miners. Ton of great analysis in this level of detail, which again will sort of stand the test of time. We'll definitely check in on these, you know, every few months or so, just kind of see how the long-term picture is looking. Thanks for watching, though.